Hey traders, welcome to another crypto market update. We will be going over gold and silver first within this video, and then we're going to dive into the equities market in America, and then we're going to jump into crypto, looking at BTC, some of the tools that we use to analyze the altcoins, as well as some altcoins like Ethereum here. So first things first, let's look at gold on the daily chart. So we do see, let's just bring that back. Massive impulsive push to the upside. We're getting a nice tight contraction in volatility. We do have a pretty significant level looking at the daily chart here where we got a major rejection at around 1970, somewhere around there. It is a zone, not an exact price point. We are getting a series of lower highs and higher lows, creating a symmetrical triangle formation. So what we're looking for is not only a break in the descending zone, but also a major level prior as a previous high. We're looking for that market structure break as well. Let's now go into the 6-hour chart to look at this a little bit in more detail. We do see that horizontal level was rejected prior, and we do see back in the previous times it was rejected right there. And if we even bring it all the way back, previous level of resistance turns to new level of support with wicks protruding below the level of support. The candle closure is on a significant time frame before the next impulsive push to the upside. So I do expect that 1970 range along with that descending zone is going to create a confluence where if we do see a break above the level, there's going to be a shift in confidence from the sellers to the buyers. And this shift in potentially seeing an impulsive push and in expanding the volatility could create silver to have a strong push to the upside as well. We do see that it is holding the series of higher lows pretty well. There was a level of confluence here where we see a previous level of horizontal support create additional levels of support with this ascending zone. And then now we are just consolidating, and it does look like we did break out of that consolidation. We do see right here, if we just jump to the 6-hour chart, we see that there is a wick to the upside, but the candle closure, even though it did close bullish, was below this previous low. So the fact that we are now above this zone and respecting it as a new level of support is great to see. It's overall really bullish. I do, in my opinion, think that the highest probable possible entry for silver would be above around $28.8, $29, because we do see that there is a level of descending resistance and the previous high there, which would create a nice symmetrical triangle formation. Could be an ascending triangle if we do get a little bit of hesitation before making that next impulsive push to the upside with this resistance right here that we hit back in the start of August, but we don't exactly know what will happen. All we know that will happen is there's a high correlation between gold and silver going up, so we will be looking at both alongside the gold and silver ratio. So this is going to be something that we look at to try to understand where they're basically going to be going. If we look at the weekly chart, we do see this key ascending zone that broke to the downside, indicating that silver is going to appreciate at a greater rate than gold. We do see this key horizontal level right here act as a new level of resistance. We do see back in August around 10th, and then we're just consolidating, barely really able to make any ground really. We do see a horizontal level right around 69. Let's say 5. Oops, that did not happen like I intended. There we go. And we don't really see much of a higher high. We actually see a series of lower highs. This is the previous high, lower high, lower high, lower high, and we are unable to create a higher high. So this is going to be the level of consolidation that I see right now. So what we're going to be looking for is a potential failure to create a higher high. And then once it breaks this level of support that we've held multiple times, that's going to create our new market structure, which is going to continue the downtrend. So we could also look at this as an ascending zone. If we connect a series of higher lows, this could be squeezing the price towards the apex of this ascending triangle, which is a possible continuation like we can see right here. Once it breaks, you get a little pullback, and then you get a continuational move to the downside. This is an ascending triangle, which could also possibly break and continue breaking this level of support at around 69. So that's the possibilities for silver that I'm going to be looking for. in terms of the gold and silver ratio. So if it does actually start breaking to the downside, we do expect silver to appreciate at a greater rate than gold. We've had times where gold was semi-consolidating, not really doing much, and silver was still really pushing through key levels of resistance and being able to appreciate compared to a consolidating gold. So I do think that having some diversification in the two metals is a possible good situation to be in. Gonna get some water and then we'll continue on with US equities, and then like I said prior, we are going to go and finish off with crypto. Alright, so this is going to be the S&P 500, the 500 largest companies in the United States. We had a massive impulsive push that really didn't see a whole lot of pullback until this massive pullback that we saw that brought the price back all the way to the previous high, which we all know would be a possible level of support. We did push beyond that a little bit, but we are able to hold it. We do see two injections of buy pressure. We see our first hold of the around $3,380, $3,400 level of support, and then we get an impulsive push. We get a second attempt from the sellers to break that previous low. We hold it, and now we're slowly climbing back up. So that's basically what we see on the large time frame here. And we're just going to be looking to see if we're able to identify if we've able to break a high. This is a high, this is a lower high. This previous level of support is going to be a new level of resistance, as we can see right here. So we are able to identify a level of resistance, which we will set a price level at 34.27. And we also see a level of support right here that was able to hold, which we can see was a prior level of support back in August. So that's going to be our support zone. So we see a nice consolidation at a key level of support. We have to remember that these levels are zones, they're not exact price points. So this, in my opinion, is a potential support, and we could possibly create, oops, that did not go through. That would not really work. I only really use 3 rejections of a trend line in order to validate it as a resistance or support. So we would need to see a structure that would look something like this, where you get your first rejection, you get your second rejection, and then you get some consolidation, you get your third rejection right there. This would not count because there's too much room in between the descending zone and the actual high. So you need these 3 key zones. You need the consolidation, the contraction, and volatility. And then once you see the first impulsive push to the upside, you're looking for that pullback that is validating a previous high. Once that is validated, you're looking for an entry, either it be a limit order when it's on the pullback or stop entry when it's breaking above the previous high. That would be the sort of method that we would be using in order to get an entry for this specific type of structure where you get a pullback, but you are looking for buys because you expect it to continue to the upside. This is a key structural level of support, level of demand, where you know that there's a high probability of buyers at this zone. So overall, this does show us that it could be a potential continuation for a risk-on environment. So we're going to be looking at speculative alts that are going to be appreciating at a greater rate than Bitcoin. And I still value BTC as more correlated to the SPX than it is to gold as of now, because we do look at the correlations. So it could change in the future, but as of now, that's how the current correlations are on a 90-day time frame. That's what we're looking at least. So let's now go to BTC. That was definitely not supposed to happen. I think I pressed something on the keyboard. This is the BTC that we like to look at right here. It already has all our charts on it here. So let's go take it back all the way to the weekly, because we do like to look at the large time frames here. We did break out of this large symmetrical triangle. We are getting a pullback to validate the previous high, which is around 10K, which is also a psychological zone. We see a nice large symmetrical triangle that is forming here on, we can see it from the 2-day, definitely the daily, and the 12-hour I think shows it best. So we'll get into that very shortly. But overall, if you know anything about technical analysis, we had a pretty good squeeze. It wasn't as contracting as I think many thought. Especially, I definitely thought it was going to potentially move to the downside with the SPX, and then we'll get a contraction even further, but we did get a break, and the actual volatility that we were looking at was contracting like we saw back in the spring of 2019 or the fall of 2018. So it's the same level of contraction as these two, so you can't assume that it's always going to be the same, but you would somewhat expect the volatility to be as significant as, even if it's half as these, that's still going to be a significant move to the upside. So my view is it's going to continue in the SPX, and other risk on assets still validate that thesis in my opinion. So I'm going to go with it. That's in my opinion, the technical analysis approach that we have to take is looking at the validations of the key resistances that are broken and looking at the overall structure and just coming to a conclusion that yes, it does look bullish. So now we're going to go on to the daily chart. We can see the symmetrical triangle even more clear on the daily chart, although we do need one more validation of a lower high to connect this descending trend line to create this symmetrical triangle here, because we do need 3 validations in order to actually use it in our structure and in our actual trade. So that's going to be something that we're going to be looking for. We did see a nice support bounce at the previous key level of resistance at, like I said, around 10K, and that's going to be not a perfect level of confluence for the descending trend line, but that is very shiftable if you look at the potential candle closures or candle wicks right here. Maybe not this one, but you see 2 wicks right there, and now you're going to get a very, very nice level of confluence at around exactly the 10K zone. So I do think that the overall trend will continue, so we will see if we get something like this. This would be awesome if we get a validation and then we actually are able to hold the support zone and then we start squeezing up right there. That would be your first one, that would be your second one, and that would be your third validation. And once you see that and you see this nice level of support hold, and then you get a strong impulsive push to the upside holding that 10K zone, I think that's going to be a really good opportunity to look for longs with a stop loss maybe below the 10K zone and maybe a second stop loss below this in case it really does move and drop below this descending trend line. Because if we take it back to the weekly chart and look at all the possibilities, if we do drop below the 10K level, we're going to be going and dropping back into the symmetrical triangle, the large weekly symmetrical triangle. So we could actually drop, theoretically all the way down to here if we were to look at this as the worst case scenario, or even further. You have no idea what is in store in the future. We're just speculators that are looking at this and trying to figure it out in terms of the technical aspect of it. So that's my view on BTC. Now we're going to go on to some of the tools that we use to analyze the altcoin market. This is the Bitcoin and volatility that we did look at initially in order to understand the contraction in volatility. So we see this around October 2018. That was when Bitcoin was at around 6,200, holding that nice, very, very tight ascending level of support with a descending zone creating a symmetrical triangle. A lot of people thought it was going to move to the upside, 6.2K to 3.2K. Very, very aggressive move to the downside. And then the second lowest point in the volatility contraction was in the spring of 2019 when we were breaking around 4,200 and we went all the way to 13.9, maybe even 13.9K or 14,000 for 1 BTC on some exchanges, which is a very significant move. And we saw that same level of contraction in the summer of 2020 when we were really just holding below 10K, and once we broke above it, we had a very strong push to the upside. So we do see it not a significant move, but if we look back at what we saw in the spring of 2019, we did have these impulsive pushes with long consolidations in between them because this is the 2-day. That's a decently long time. So in my opinion, I still think that it's a possibility that we're going to get that strong impulsive push to the upside, which means I do expect Bitcoin to get a strong level of buy pressure exiting this symmetrical triangle to the upside. Looking at the altcoin market, this is the total 2. This is the cryptocurrency market cap excluding BTC. It does look very similar to the Ethereum chart, but overall we can see this previous high right here, and this previous high, which is the previous high of that one, is broken, and we do see it's validating as a new level of support, which is great to see. And overall, it is pretty bullish for the altcoin market. We do see this previous level of support act as a strong level of significance and then create a strong level of resistance from that area. And this was the consolidation for the altcoin market, where a lot of altcoins started to die out. Nothing really significant happened, and then once we started seeing that break, then we are extremely interested in altcoins. Some altcoins did, but looking at the average, if you look at Link, it's done extremely well compared to BTC and a lot of different alts, but there are a few outliers for sure. Gonna get some water, and then we're gonna look at the market cap of BTC Dominance. So this 62-ish level was a major level of resistance when we were trying to break back above it in the kind of transition from 2018 to 2019, and that was the bear market. And then we broke up above it, and then we were able to consolidate, making lower highs, and then we broke below the zone. It's just been consolidating, not really doing a whole lot. When we are in an extreme bull market, we will see the BTC Dominance usually fall, like we can see right here, and that's just because there's mass speculation within the altcoin market, driving the market cap to crazy heights in altcoins, just because there's a lot of speculation happening. There's a lot of new money coming in, which obviously means if there's more buyers than sellers, the prices of assets are going to generally be going up. So in short, if new money is coming in and there's not a lot of money going out, obviously it's going to be a very bullish market, and that's when the market cap absolutely capitulates for BTC in relation to the overall general market cap for crypto. So not a lot to talk about, but just some discussion on kind of more why you use it and why you want to look at it, because it does give you quite a bit of information. Alright, so now we're going to be looking at Ethereum. So let's just take, I'm not going to take this off, let's just talk about it. So we were looking at a symmetrical triangle here. I do expect this potential low to hold, because I'm not going to short Ethereum at this point, definitely. We could see a failure of this ascending zone, and then a hold of this descending resistance, and then a slight contraction, something like this, where you get another rejection, maybe a previous level of support. We see this ascending level of support turns into a new level of resistance, but then we are able to hold this descending zone, and then we get a strong push to the upside, breaking the previous high, and that would be, in my opinion, a huge shift in confidence, where the sellers are trying to attack the price lower, breaking this ascending zone, but the buyers are saying, nope, I'm still going to hold this level of support, and I'm going to push the price higher, creating a strong impulsive push to continue the overall risk on environment. So that's going to be my view until we see something different in the overall market. We talked about SPX. We can look at the volatility of the SPX, and it's just fading, moving to the downside, which is great to see. And I do expect the overall environment, not just in crypto, but in the kind of global macro sense, to continue, just because it's withstood almost really anything it's thrown at it, and at a technical standpoint, it does look very sturdy, and our opinions could shift if something very significant happens, but it's holding supports all around, and it does look pretty great. So that's going to be my view of the markets. Thank you very much for watching. Till next time, have a good one.